We have different types of fundamentals when it comes to forex trading, but on today's video we'll be focusing on interest rate. After watching this video, I guarantee you'll be able to make ton of money trading the strategy using interest rate news only. We have two types of fundamental interest rates. The first one is rejecting one, and the second one is non-rejecting one. The rejecting one is the one that takes opposite direction before goes to the correct direction, and the non-rejecting one is the one that goes straight to the correct direction. Now let's look at the rejecting ones. The rejecting ones, we're only going to trade AUD pairs, NZD pairs, and also Euro pairs. When you talk about AUD pairs, we talk about AUD USD, AUD JPY, and so on. And then when we talk about NZD, we talk about NZD USD, NZD JPY, and so on. And also when you talk about Euro USD, Euro JBP, Euro CAD, and so on. Those are the interest rate that going to reject. Three of them: AUD pairs, NZD pairs, and Euro pairs. And the one that is not rejecting, which is non-rejecting ones, are the CAD, are the USD, are the GBP. When you talk about the CAD ones, are the ones with CAD JPY, CAD GBP, and so on. And also the USD are the ones USD JPY, USD CAD, and so on. And also the GBP ones are the GBP NZD, GBP USD, GBP JPY, and so on. Now let's focus more on rejecting ones. What are we going to trade? We're going to focus more on AUD pairs and Euro pairs. The real question is, how do you really trade the rejecting ones? Let's break down the rejecting ones on how you can trade them. For now, we're only going to focus on two pairs, which is AUD and Euro interest rate. We have three, remember, and also we have NZD, but for now we're not going to focus on NZD. When trading AUD and Euro, placing your trades before the market occurs, which means placing your trades a minute before the event, is not advisable because the market is going to reject. All you need to do is to wait for the event occur. Take the direction, which is going to be the opposite direction, before going to the right direction. Let's say the actual direction of the event is the sell. The market is going to start going up. You wait for that moment. When the event occurs, the market is going to shoot up. After shooting up, if you see the rejection of the AUD and Euro pairs, that's when you start placing your trades, and you barcode as fast as you can because it's going to move faster. So you need to be fast and also use a broker that is going to place your trade faster while the market is rejecting. Remember, there is a point whereby when the events occur, the market shot up. So when it's shot up, you wait for the rejection. When you see the rejection of the AUD pairs and Euro pairs, you start barcoding up until where the move started. That's when you stop entering your trades. That's when the market will come back, take the right direction, which is sell. That's how you trade an interest rate. You need to know that not all the time the market is going to reject, but most of the time it's going to reject, which is maybe approximately 80% of the time the market of interest rate trading AUD and Euro pairs is going to reject. So that's why you have to wait for the rejection. If you don't see the rejection, you don't trade at all. Don't force trades, like I always say. When you specifically choose to trade AUD, you need to be careful because AUD pairs move fast and you also need to act fast compared to Euro pairs. Euro pairs are slow. You are able to catch the moves easily. But when it comes to AUD, you need to be careful because it's going to act fast and you need to be fast. That's why I'm saying you need to use the broker that is going to allow you to place trades fast as soon as possible before the market take the direction, and also you're going to place your trades late and end up losing your money. And it is also vice versa when the markets the right direction of the interest rates when trading AUD or Euro pairs is a buy. it's always going to start with the opposite direction, which is the sell. When you see the rejections, you enter your trades up until where the move started. That's when you stop entering your trades. It's still the same. The AUD will always be faster, whether the market start rejecting at the buy side or the sell side. It's always going to be faster compared to the euro pairs, whereby the move is faster but not compared to the AUD pairs. Now let's go to NZD, which is part of AUD and euro pairs that reject. But the reason why it's not part of the AUD and euro strategy is because it has 50-50 chances of rejecting and not rejecting. So you're going to choose whether you're going to use strategy number 1 to trade it or strategy number 2. Strategy number 1, you're going to trade it like AUD and euro. You wait for the opposite direction of the market, you enter when you see the rejection, and then you stop when the market reached the point where the move started. And the second strategy is whereby when you go to 15 minutes time frame, you see a red candlestick, a red candlestick representing a sell. Some people use different colors, but let's talk about the red candlestick. The main point is that it is selling. You're going to buy it 1 minute before the market. If you see a red candlestick, if you see that the market is about to sell, 1 minute before the event occur, you buy. Vice versa, when you see the green candlestick, which represents the buying side of the market, you're going to place your sales before the market occur 1 minute before. That's how you trade NZD interest rate. If you want to see me trading these strategies on an actual market or showing them on the actual market, let's get this video to 10 likes. Now, how do you trade the non-rejecting interest rates events? Under this section, like we said before, we have CAD pairs, we have GBP pairs, and also we have USD pairs. Under this section, the strategies, we have 3 of them, and they are simple. We don't wait for any rejection. We always enter into the market 1 minute before the event. So we are going to use 15 minutes time frame to analyze our strategies, but 2 of them. We have M formation and W formation. M formation is double bottom and W formation is double bottom, meaning that a minute before the event occur, you need to check whether the market is forming M formation or a W formation. If it's forming a W formation, you are going to look to buy, meaning that the market is going to complete the M formation that occurs on the market. And also vice versa to the M formation. The market needs to complete the M formation. So you're going to enter your trades 1 minute before so that the market can complete that formation. Strategy number 2, you're going to look for V, or I don't know how to call, the opposite of V, if I may say. So the market 1 minute before, you need to check which formation is it going to complete. And then if it's V, you're going to look buy. The opposite of V, you're going to look for selling opportunity. The last strategy, you need to go to your economic calendar. Economic calendar is whereby you're going to know whether we are going to have news events today at what time and so on. And also it has a previous and a forecast. So let's say from the previous to the forecast, it shows a positive slope. What you're going to do is to buy the markets because the slope says positive. So most of the time, the forecast tends to be correct, even though that is not going to be exactly, but it's going to have positive impact. Vice versa when it's come to, same goes to when the previous says the slope is going downside, meaning that the previous is bigger than the forecast, meaning that the news are negative. So you're going to sell the market. That's how easy it is. Please make sure that you hit the subscribe button so we can go together, and I will give you the strategy that I'm trading and also share the information